How we doing out there, traders? Welcome to it, Money Mitch. Let's go ahead. Let's dive right in. Today we're going to talk about explaining how President Putin's affecting the market right now. Of course, you guys are probably watching this. Why I feel that gold is still a great trade, and what will happen if this continues, all this pressure, all this uncertainty. What's going to happen? Find on out. We got a great interview today. We got Joe Brusuelas, the chief economist from RSM. Get ready, guys. We got a great show. I'm going to talk about what sectors are hot. What did you guys see moving today? I came on a little bit early. I know I'm normally on at 4:30, so you guys smash the like. Let's get started. Say hello in the chat, and let's go. Welcome to it, Money Mitch.
It's time for Money Making Mitch. When investors need a story, we're going to the moon. Welcome to Money Mitch, where story is everything. I'm here to find you the next opportunity. It's all about the green hands. Now we all know the bull market is here to stay. Money Mitch.
What's going on, traders? Welcome to the show. Let's go ahead. Let's dive right in. Let's see what we got moving out there. I'm going to go ahead and see what we got. Let's go. Let's take a look here. Stocks are moving out there. As I was taking a look at some basic materials there, but let's take a look at the SPY. Closing down here, guys, close towards that danger zone. Danger zone for me is below 428. I think we could get a continued momentum move on the downside. The real question is what happens here, and do we get that next break on down? I think a lot of this is going to be based on a couple of factors. We still got the Fed trying to raise rates. We still have, of course, the talks that are going on right now. Today, I mean, we did see President Putin kind of send forces and Russian forces into separatist region. We saw major kind of sanctions start being pulled out. Also talks of more to come if continued activity kind of keeps going. We'll see what happens. Let's take a look at the Qs. Q's also coming down towards that danger zone, 338.90s, right on it, guys. Right now it's sitting there at 339.60s. We'll see if it comes up towards the 350s or starts heading back down towards the 330s. This is not looking good, guys. If you actually look where the 200-day moving average is on the Qs. It's actually significantly high, and you're starting to get what? Really close to a death crossover here where the 50 gets below the 200 days. So just be careful, guys. We could be in kind of downward action, free fall in the Qs. The Qs did see some stocks bounce today for a short while before getting hit on the hard side. Let's take a look here. AMD kind of went up, down, up, down. So we'll see how this one continues to hold. It is going sideways there. So we'll see what happens on AMD and seeing if these tech names can hold. Of course, what have I been taking a look at? I've been taking a look at the gold trades. Want to do some couple shout outs in the chat. What's going on, Ego out there? How you doing? Julie, it's good to see you in the PM. Let's go, Julie. Beach Bum in the house like always. Smash the like, guys. Let's keep this going. Looks like we got just about 47 people here. Sometimes I have over 400. I think that's what we should have. So hit the thumbs on up. Hit the share button. Let's get some more people in here, and let's keep rolling. All right, so other stocks that are looking interesting right now. Communication services went up today, but I mean, there wasn't anything that really stood out too crazy here for me. You can see some of these names here. GSAT, interesting kind of global satellite company, but nothing really that I would keep on watch. What I did see move today is a little bit of defensives, and it wasn't all the names. It was just certain ones. Look at DNUT. DNUT setting up with a nice push on up. This is Krispy Kreme pushing on up there. I'm going to actually put this one on my radar a little bit here, and we're going to set an alert here up at 1526 to see if we get alerted tomorrow to make a trade on this one. Celsius Holdings, you guys know this one as the energy drink company, and I will put it out there. That's a hot stock Luke favorite. So definitely we'll see if Celsius Holdings can start pushing back on up. holding support today, getting a nice 8% day. But really what stood out to me and why I even looked in this area was Kraft Heinz Company. Of course, this is a packaged food company, and look how strong it's been in the last couple of days. I missed this move because of, Friday, but now look where we're at, guys. This has really made significant moves on up. This has made about 10%, 15% move here from the bottom. And so we'll see if this can continue making moves here. Kraft Heinz, and you can look at some other packaged foods to see if they start moving. Other ones you guys can keep on watch. There's a couple of them out there. There's a whole bunch of these kind of relatively newer ones too. This BRCC. This is one that I put on my radar for a breakout above that high there. 23. It did get above there today, but didn't continue to hold. Just be careful with these names. I feel like they're going to move all around. Kellogg's is one that I'll actually look for the upside move. So if you're looking for Kraft Heinz to kind of break on out, look for Kellogg's also to make a nice push. Ashton, what's going on? How we doing out there? Jim Cruz, what's up? All right, so let's take a look here at some other areas and where we can see some trades. Let's take a look at some oil names. So today I was taking a look at oil names. MRO was the one that I was really watching. I was going to see if it was going to come up towards the top of the range. We did that in pre-market and then ended up going from the top of the range all the way down here towards the bottom of the range. Oil definitely volatile today. As you can see in pre-market, we were up there towards a high of 23.50s, and then we ended up getting in the intraday to a low of 21.15s. So this one was definitely trappy. I actually got stopped out in this one, got in here. Looking for the big push above 22s. It started getting up there to 22.10s. Could have maybe taken 20, 30 bucks. But then when it broke here on the 21.90s down this downside move, I went and got out. Glad I got out and didn't get caught in the downside action there. XOM is another one that I was watching to see what was going to happen in ExxonMobil. Was it going to push up through the 77s? That's what we were going to take a look to see. And it did not hold those gains. So we'll see what happens there. If we could see this stock's kind of turn around and start getting moving. Oil is a real kind of thing to watch right now. A lot of this has to do with a couple of different aspects, right? We have the Russian-Ukraine situation, but we also have the Iran nuclear deal. I think this is going to help some of the supply issues that could come from Russia. Of course, when we talk about Russia, we're talking about a major oil producer and, of course, natural gas. If you think about it, almost about 1 in every 10 barrels comes from Russia. So that just shows us that, yeah, we don't rely on it so much here in the United States, but it is something that is heavily relied on in Europe. And we'll see how this kind of affects kind of the global oil move there. Of course, I think Iran is going to help, but it could be two things. Let's say if Russia doesn't continue with all this and they turn around and you get that oil back towards the market, you could see a big dip in the market in oil. So is this going to be back and forth, and the volatility will be present? That's for sure. Let's take a look at some of these basic materials. Not finishing the day with the best day. I thought they would have a better day today, but definitely taking a bit of a pullback was Alcoa and aluminum. Aluminum taking that big pullback here today. And you can see here on the chart, I'll show you guys that big red candle. And just in that case, look at the index overall. Nice pullback there. It honestly doesn't mean that it's gone away, but definitely had a pullback type of day. Gold is a similar stock, right? This had a pullback today. We're going to look for a continued breakout in gold. Why do I like gold? It's because it's in the inflationary trade. If we're going to get into battles and continue having high inflation, I think you start seeing gold continue to take off. Now, we've had a couple drive on up. So I can see here, okay, we got a 1 up. We got that second up move here. We got the 3 up. And then we rejected to get towards the trend line here around 23.14. I'm looking for a push back in towards 23.25 tomorrow to see if we can get a breakout, get above here, and then get this candle back up towards 23.75. Of course, what I would want to see if gold is going to continue moving is more of that inflationary environment and more stories being brought up about that gold inflation trade. This is one trade that I've been holding, guys, is AU. I'm still holding this trade. I'm up significantly, but I want to see the breakout. We had a nice breakout today. It went towards 2280s. I want to see if we can get back above 2250s tomorrow. If not, underneath 2175s, we could take the rest of the profits. All right, let's keep going. Gold is definitely going to be one to watch. Today's trade of the day was in U.S. Steel, making a couple nice trades there off the lows and then riding it back on up there towards the high, getting out some of it towards the high of the day. Wasn't able to get all of it out there, eventually stopping out on the rest of it near the 24.48s, but had a great gain there. So not a bad trade there. I'll kind of zoom in here so you guys can see that trade a little bit closer here on the 1 minute on X today, guys. So we got it off the bottom there, ended up watching the breakout come, selling some into that first move, and then selling some after it turned around here at the 24.50s. And that's not a bad move to get on out because you can see it came back to VWAP, and that's what I was concerned about. Not a bad trade there in US Steel. Another one that I was looking at was NUE. How did this end up on the day? It was doing really well. Let's see how it ended up on the day. It actually broke down significantly later in the afternoon. So you just got to be careful. These trades have come up and down. There's certain times where they're holding the patterns, and there's certain times when they're breaking down big. All right, guys, we're at 4:33. We're going to have a great interview today coming on up, guys. Stick around. Definitely, we're going to get into that. That's going to be an interview. Wrong banners there. Sorry about that. It's going to be an interview with Joseph Brusuelas, the chief economist from RSM. Stick around, guys. Joe will be on shortly, and that'll be at 4:45. I'm excited to get into that and talk a little bit about the economy overall, right? What is going to happen? We'll get into those questions. If you guys got a question, throw it up in the chat. Maybe you got a ticker to take a look at. We're going to do some ticker time actually before the interview. So if you guys want to throw some up in just about 4 minutes, go ahead and start throwing those up. If you want already, throw some tickers in there. I'll keep going through. All right, let's go ahead. Let's dive into some other areas. What could we be watching? Financial services was an area that I wanted to keep watching to see if we were going to get a recovery candle. And today kind of went sideways, not really giving us that lift. I'm going to see if by the end of the week we can get that lift. So stocks like Bank of America, I'm taking a look at. Can this stock catch a bounce after a significant retrace? It tried to push on up there towards 50 multiple times. We're going to look for this to come back into a green day tomorrow. That's Bank of America. GS is another area that I'm trying to look to see what's going to happen. Is Goldman Sachs going to really start coming back? Or are they going to come back and take out the lows there? We'll see if these names can get moving. JPM, of course, Morgan Chase here. We'll see if it can get back up towards 155 and 160s tomorrow. This one actually closed green today, so maybe this one has the highest relative strength compared to today. All right, let's get into it. Let's go. What do you guys got to take a look at? All right, I'm going to see in the chat, see if there's any names being thrown on out there. Looks like GME is being thrown on out there. Let's see how this is going. All right, let's take a look here. GME, the big level for me is that 130 level. I actually gave it in the pre-market. I said, be careful, guys, because we need to see if it can get back above that 130. You've seen it get up there 130 before, but you haven't seen it stay up there. We're going to see if it can get back up towards the 130 and stay. AMC was the one I was saying, hey, guys, if this can't hold 18 today, watch out because this could easily be back down to 15.22 and you're holding down towards that trend line. So just be careful. I think these can be taken down if they don't get back in moving in the right direction. All right, there's a lot of stocks rolling through here. I'm going to try to get through some of these stocks before we get to our interview. Let's go ahead, smash the like if you guys are enjoying it. All right, gold and oil stocks are still good to get in. Well, the way that I look at this now is that if you're looking to just get in now, it's kind of a little bit of an in-between decision, right? Because these have already ran a good amount. And so if you're looking at it now, you're looking for more the momentum play just to get that continued momentum after a rest day or a sideways day to look to see if you get that next lift on up. So that's how I would be approaching it. Doesn't mean necessarily that it is just to jump right back in. I've already been in some of these gold plays, but I am looking for some momentum plays to jump on these in the day trading action. All right, let's take a look at the Roku. Roku actually finding a bounce today, getting back up there towards the 130s. I'll see if it can get back up towards 150s, but for me, this is one of those, it's just a dog. It's just a dog, guys. It goes up and down, but at the same time, it's been in a long sideways trend here towards the downside, downwards trend here towards the downside. If you could look and draw back to where the high was, you're talking about 76%. Roku has taken off, guys. So does Roku get interesting at some point? Yeah, I do think it gets interesting at some point. I mean, at the end of the day, they have the ability to get to a lot of the kind of the US market, right? They're in a lot of the TVs, and then a lot of the TVs are either already either with a Roku app or you adding the Roku app. So under 100 is where I'm going to actually say that I'll start taking a look at Roku right here. I still think it's a little bit high, but we're not talking about too much higher than 100 there. We'll see if it can start turning around. For right now, it's definitely a no touch. What's going on, Wayne Hutt? Got the green hands out there. AV wants to talk about AMD. I'll definitely get into that, AV. Let's talk about Palantir here. What are we going to see in Palantir? All right, so Palantir is down towards 1050 until it gets back towards 12. I say no touch. This is kind of more of a bearish chart for me and going to continue looking bearish right now. All right, let's keep going. Ticker name, WOW. All right, let me take a look at WOW. That was a good one. Bubba talking about WOW. Let's take a look here. Media diversified. Looks like you're getting a little bit of a pullback towards the support. Looks like a lower volume traded stock, so you got to be a little bit careful trying to get this on this big push. I would look, man, this is kind of a harder one because it looks like it's a relatively newer IPO, at least. I mean, it came out in 2017. That's because I was on the weekly. You got past these IPO moments, right? And you started being able to hold them. Look for a pullback towards those levels around, let's say, 18 to 17.26, and then a move back towards 19. That's what I'd be looking for in WOW. But I really don't know too much about wide open West. So maybe you need to teach me about it. Bubba, might need to learn from you, man. Jim, looking at the UPS. Let's go ahead. UPS, let's take a look here. UPS is pulling on back here. Looks like it's trying to catch some support near the 200-day. That's the 204. Look. Let's see if this one can really come back on up. It did pop on those earnings. We'll see if it can come on back. AMD, let's go ahead. Let's take a look. AMD, what's going to happen? AMD was kind of in a sideways trend. We'll see if it can get back above 120. Today, it was just sideways action, but relative strength. I mean, it wasn't going down, so it was still holding that sideways action. That's not a bad move to look at. All right, let's keep going. Having severe OCD, the AMC and the GME. Yeah, that's how it is. QCOM, let's take a look at that. All right, let's go ahead. Let's see if the QCOMs can get back on this move. It was looking like it wanted to get through 188, then quickly turned around, has come on down there, and looks like it wants to break through that 161 until it gets back above the 50-day here. So if you see this yellow line here, you're going to see the 50-day. Let's let it get back above that and kind of sweep through there. Then I'll be looking for QCOM to do the breakout of 190. I don't want to be trying to call the bottom here. I want to catch it on the move back up. What's going on out there, Richard? Let's go. I'm sitting on a couple of long swings from PSX and VLO. My plate is full and learning how oil moves during the verge of war. Hurts my head. Yeah, it is a headache, Shannon. Oil is one of those things that has a lot to do with what the battle of supply and demand. And there's things like, and we'll talk about this a little bit with Joseph coming on up here in our interview in just a short minute. But there's things like reserves, right? Like the U.S. has reserves that it can pull. There's always moments and deals going on. OPEC, what is OPEC doing to either control supply? Are the kind of the shale producers kind of abiding by the OPEC rules? Sometimes they don't even abide by the rules themselves that they put on themselves. So just be careful. Oil is all over the place. One thing I will say, though, is if we look back, we're always going to look back at oil and be like, man, we missed out on a huge trade out of the pandemic because the demand did come back. We'll see what happens with oil and to see if we can continue getting the run. Of course, there's just a couple of things that are going on right now, big macro catalyst things that are flipping it around. Sometimes you're going to get those movements like today in MRO. That was a hard trade. I mean, I can tell you that right now. I got stopped out on it, and I got stopped out on it after I watched it pull back towards the hourly support. But to tell you the truth, this is not common, seeing MR go from the bottom of the range all the way to the top of the range, essentially. That's what we were looking for, but it did it in pre-market, then gave it back right out the gates. We'll see what happens on this MRO. Of course, guys, we're going to continue watching some sector and industry analysis. What I love doing most is working backwards. We'll continue to see what we see in the market. If we can continue seeing some strength out of our gold plays, we'll take a look. Of course, I'll be watching that and be trading it live. I've been holding that AU trade for a while. We're still in the position of strength, so we're not going to turn around and sell it immediately. But of course, today was one of those days where we got more choppy action. For me, it's going to be important. That's 430s, the 435s. Where do we get on out of this? And do we break down that big important level that we bounced out of, during kind of the January 24th window to January 28th? We'll see what happens. And if we can hold those lows and keep on fighting back here. Of course, there's a lot to talk about. So let's go ahead. When we return, guys, we're going to go ahead and dive right into our interview today. Today, we're going to have Joe Brusuelas, the chief economist from RSM. Stick around. We'll get right into that interview when we return right here on Money Mitch.
I tell all my CEOs, this is a very, very, very important platform. And look, all the other platforms are important too, but you're up there now. You're way up there.
Best investments you can do in your future.
All right, let's go ahead. Let's dive right in. Sorry about cutting that a little bit short. Accidentally hit the button there. Got a little too excited for the interview. But let's go ahead. Let's dive right in. Let's bring on Joe here, chief economist at RSM. Appreciate you coming on and welcome to the show.
No problem. Thanks for having me.
All right, so let's go ahead. Let's dive right in. Of course, today, we got some more updates out of Russia. But first, I want to know a little bit more about your journey, Joe, and how that brought you to RSM.
All right. So like a lot of economists, I worked in and around Wall Street for many years. Many of your listeners and viewers probably know me as the chief economist at Bloomberg LP, where I created the Bloomberg Economic Brief. I think that we revolutionized Wall Street research, turning it into a more accessible, data-driven, data visualization-driven project. And after a while, I got a little bit tired of the trading community, and I wanted to focus on the real economy. And by moving over to RSM, I was able to do that. We've created a whole suite of products. And really, by focusing on the real economy, we'd be able to bring a lot of the research that really you'd only see in New York or London. Well, you can now see it east of the Hudson River all the way across North America. And right now I'm really focused on individuals who invest in businesses, meaning they're not worried about day trading. And I'm not going to talk about day trading because I'm not interested. Nor are they really worried about, the end of the month. End of the quarter, yeah, sure. Bottom line, you only want to see where your earnings are, where your profits are. But really they're making 5, 10, and 20-year investments. And that's what I'm really interested at this time when we need to see a complete renewal of our economy.
Definitely. I got no problem with taking a deeper look into the stories, right? And understanding a combination of things. One of the things I talk about here on Money Mitch is not always just looking at the technicals, trying to use some different variables to really understand companies as a whole, looking into the fundamentals and using a combination of variables to really take investment decisions. One of the things that we see common nowadays is just kind of more one variable use or one leaning on one side. So it's good to definitely hear that you guys are trying to do the research for investors out there, not just the day traders, swing traders, and the day-to-day action. Let's go ahead. Let's talk a little bit about what we saw today now that Vladimir Putin decision to send Russian forces into separatist regions.
Sorry about that. They
No
won't
worries.
leave me alone.
I know how that is, I'm sure. So now that we're seeing here this first move of action, what do you think that we can watch for in the markets to kind of give us the signs going and leading forward?
All right. So if you're a trader or an investor, these are the sort of days that live in your nightmares, right? This is that idiosyncratic risk that they teach you about when you're reading the textbooks, and the type of exogenous risk that you can't properly hedge. So Russia is engaged in a limited incursion into eastern Ukraine. And in response, we've seen some very nuanced sanctions, tough, but not yet broad and deep. That's been sufficient enough to roil global markets, who are clearly now worried about the other shoe dropping, a full-fledged invasion and a European war breaking out. What we did a couple weeks back is we subjected the US economy to a series of econometric shocks via the energy and consumption channels. For those of you out there who are quantitative gearheads like myself, 2, 3, and 5 standard deviation shocks. So our base case, as of 2 weeks ago, was a 20% increase in the price of oil, which would be translated almost 1-to-1 in a 20% increase in the price of gasoline. Should a full-fledged war break out, we're not quite there yet. So what have we seen? 7% increase in the price of oil, volatility across financial markets, people buying into bond markets on safe haven moves, and people moving out of risk-taking, and an overall diminishing of risk appetite. I think what you're seeing right now is a real volatility in the market. And this is part and parcel on top of the risks around rates rising, irrespective of what was going on in Russia, and what I call the regime change in growth in the United States. We're moving towards utilization of fiscal firepower in a way we haven't observed in several generations. And if you're out there in markets, essentially what's happened is we've reached the end of leverage beta, and you're seeing the return of alpha. Essentially, no more excess liquidity, no more free money, no more leveraging up to engender excess returns. You're now going to have to earn it. You're going to have to go back to picking it, right? And essentially, financial markets for the past 5 to 7 years been a little bit like those second-grade soccer leagues where everybody gets a trophy, whether they win it or they deserve it.
Yep.
Well, no more second-grade soccer league. You're all being promoted to the NCAA, and you're going to have to compete. Things are going to change. The structure is going to change. And, it's not surprising that investor sentiment is soured, I think, because everybody's realizing that we've reached the end of what looks to be a 2-decade-long era across financial markets and the U.S. economy. And now we're moving into uncharted terrain. Perhaps we're better off calling it back to the future. But that'll be another discussion for another day.
Love that. I definitely want to hear more about that, but we'll dive into some other things here. And of course, like always, one of the things is the environment does change. I say this all the time, and I've had some people asking me questions, but what about Google stock split? We saw the last stock split. It went to the moon. Well, I asked myself, just ask yourself, is it the same environment? A lot of times you have to ask yourself that question. I feel like environments have changed now. Of course, now let's talk about some industries and decisions that will come out of this. One of the things is the Fed gets into a tricky situation here of what to really kind of go after. The inflation just seems like it's just roaring its head. And if anything, we have more uncertainties to higher inflation now. So where are you seeing kind of the Fed here, Joe?
Right. So the Fed can't do anything about the inflation that's in train. What it can do is do something about inflation at the end of the year and in the next year. So the Fed is setting up to hike rates. We've begun on what's going to be a 2 to 3 year campaign of policy normalization. The market's priced in 125 basis points minimum with to the upside. That's 7 hikes this year. I think 4 to 5 look about right, but we'll have to see how this current crisis evolves and the dynamics in inflation that clearly are now still located in energy and transportation. If that begins to ease, you're not going to get 7 hikes. And again, I think 7's a bit excessive, right? Now, this is just the orthodox set of tools that the Fed has. The Fed's also going to use its unorthodox tools. It's going to use the balance sheet. It's going to reintroduce risk duration back into the market by allowing proceeds that mature to run off. They're not going to reinvest it. My sense is they'll phase this in. They'll start at around 60 billion here sometime over the next 3 to 4 months and get it up to around 100 billion a month. Over the next 3 years, it'll be about $3 trillion that run off the balance sheet. That should push up rates at the long end of the curve, which will create policy space at the short end of the curve. Now, remember, when we talk about rate hikes and the federal funds rate, it's a very imprecise tool. It's a little like trying to drop an anvil on a table to kill a tsetse fly. Well, you'll kill the fly, but you're also going to damage the table and probably the floor and the foundation when you drop the anvil. So the Fed's got to move carefully, and they got to calibrate and communicate what they're doing to investors so as not to create an unstable set of expectations. And to circle back, 25 basis points in March seems appropriate, but the Fed should be crystal clear about this. We're going to hike 25 basis points, and then we don't know what we're going to do. And they need to note the real risks around the global and domestic outlook due to the possible disruption in the supply of energy, that's oil and natural gas, going forward. That in of itself will cause the economy to cool. So that does not necessarily imply that the 7 rate hikes that the market's priced in will happen. And one of the things I think we've all learned since Ben Bernanke started down this road with unorthodox monetary policy, those federal fund rates are thin in illiquid markets and often represents market investors out over their skis. I urge all of you out there to proceed carefully and avoid being attracted to the corner solutions, the false dichotomies, the 0-1 explanation. It's going to be a lot more complicated, a lot more nuanced. And I would hope that you're listening to individuals who've been through these crises, that it's not their first rodeo, because that's when this gets dangerous.
Definitely, I agree, especially new investors out there. They're just gotten in, let's say, in the last 2 years. I would definitely listen to the advice Joe just mentioned there. Look for the experience. Look for people that have been through the troubled times to get you through that troubled time. All right, let's go ahead. Let's keep a look. Let's keep diving into kind of the problems that we're seeing out there. Of course, the supply chain issues, I think, are something to definitely keep an eye out on. Right. You know, for a second there, it looks like we were getting some kind of alleviating factors really starting to come into play. And now, boom, we just kind of hit a little bit of a wall here. The real question is, what happens to the supply chains moving forward?
All right, so we've got our proprietary supply chain index. We put it up for free for investors like those who listen and watch your show. So go to our platform and get it. It's very, very good. What happened? Omicron caused the improvement in supply chain stress to backslide a bit. And that was to be expected. You know, during the middle of November to the second week of January, 20 million Americans called in sick to work. You're not just going to see the consistent level of production and distribution that you would have seen under ordinary circumstances. Okay, that will improve. So that we got that going for us, as Bill Murray might say, right? But this potential exogenous shock here through the energy channel, and also in esoteric areas of the economy like the production or provision of palladium, right? Russia produces 45.6% of the total global share of palladium that's used often to create very advanced, sophisticated microchips, which feeds into the production of everything from very expensive autos to electrical meters that we put on the back of houses so you can see how much energy they're using. This also could disrupt supply chains. So when are we going to see real relief? A couple of things. I was just looking at data on the backup at the LA ports. It's eased substantially. We're moving back towards normal. So there's some good news out there, but it won't show up significantly probably until the end of the third quarter, fourth quarter at this point. So we're gonna have to live through that this year. But as those supply chains are reconstituted and normalized, you're going to see a flood of products, especially goods, Now, let me give you guys something to look at. We're still not anywhere near where we were the production of, say, autos prior to the pandemic. We're just under 14 million. We should be closer to 17 to 18 million. That's a pretty good proxy for disrupted supply chains and shortage of goods. Yet you can walk into just about any GM dealership, get one of their very nice, technologically sophisticated SUVs at zero invoice pricing. Now, why would they be doing that? Why would they not jack prices up further, right? And actually charge a little bit on the self-finance, GM self-finance interest rate, because they're profoundly afraid of being caught on the bad side of this as supply chains normalize later this year.
Well, the real question is, can they get it back?
Yeah, we'll get it back. No, things are good. So I know for many people out there, the lockdowns during the pandemic are something akin from watching a zombie apocalypse movie, right? And indeed, downtown Austin, where I live, looked like a zombie apocalypse movie for a while. It wasn't a pretty thing.
I mean, we saw the trucking situation in Canada, right? I mean,
yeah, right. Well, that's a little bit of a different thing, I think. But as a matter of fact, that's a very different thing. That's more artificial than real. We haven't done anything like that since we put wage and price controls on the economy during World War II. And then when we finally lifted them in 1947, we had 3 years of 8% inflation that followed. It's not too bad of an analogy to what we're going through now. We locked down the economy for the better part of 2 years. We've now reopened it, and there's a shortage of labor, there's a shortage of goods, and services aren't being provided in the same quantity as they were before. As we move forward, yeah, it's going to snap back. You watch. Chinese economy slowed to a pace of growth well below that of the United States. Don't be surprised if you see a flood of cheap Chinese goods flood the zones here going forward over the next year or two. And then inflation will move back towards the long-term target of between 2 and 3%.
Like always, one of the things I want to do is end up on a positive note. So I've been watching the reopening trades, kind of leading what we've been talking to. And one thing that I've been noticing, and I talked about it in January, that I thought that would be really the kind of the peak of COVID, because you were seeing so many people call on out. And now we're starting to really see that kind of turn on over, where you're just not seeing those, especially month to month numbers. And we're really getting towards that reopening and the kind of the worries are starting to go away. Is this the reopening? Do you feel that we've really gotten to the point where at least we can really take on off? I've been looking at different plays, whether that be airlines or cruises, but just in overall sense, reopening.
I've got a great sort of strong note to end on. Over the last 3 months, total employment's changed by an average of 541,000 each month, right? The economy grew roughly at 7% to close out the year. Corporate profits, despite the volatility in the stock market we're seeing, are at or near all-time highs. Despite wages moving up by close to 6% and inflation above 7%. How do you get all of those conditions to align? There's only one way for that to happen, is if you're experiencing a productivity boom. We're investing in integrating sophisticated, productivity-enhancing software equipment and intellectual property in this economy in a way we haven't since the 1990s. That means the economy can grow faster, profits will remain strong, increased revenues in part get passed along to labor via higher wages. So even amongst the inflation rate, which is going to be well above the 2% target for the next couple of years, the economy is poised to do very well. So those reopening trades, those value trades within the context of higher inflation, things are going to look much better. This is the sixth inflation we've had since World War II. All 6 periods have been different. Don't fall into the trap of talking about this as if this is the 1965 to 1985 inflation. It's not. We've got very different conditions. A service-based economy that's predicated on the rapidly growing digital portion of the economy, and one that's linked to an open global economy. It's not like back in the 1970s when you could get to 3 types of jeans versus the 200 type you can get now. You have choice. Prices will move. Price stability will return to the economy soon enough.
Excellent. Well, you guys heard it here on this interview here. Joe, where else can they kind of hear from you or get more about you? I know I threw up your Twitter handle in the chat for everyone to kind of follow on that. I do have the link right down towards the bottom there if you guys want to go straight to RSM and kind of check out everything they have to offer. But is there anywhere else they should look, Joe?
Sure. The RSM economic platform, we put out everything for free. We don't charge. At Joe Brusuelas on Twitter, Joe Brusuelas on Facebook, Joseph Brusuelas on LinkedIn. Look to see you guys out there. I'm on CNN, Yahoo Finance, all the major financial and news economic platforms.
Yep. Now we got you on Benzinga, man. We got to keep it going. So I appreciate you coming on. Great talk today. I know that the audience really loved it. A lot of respect, a lot of comments mentioned out there that they appreciated your coming on today. So we'll have you back.
Well, Jason Raznick's an old friend. I'm always happy to come on Benzinga. Best of luck to you guys in your endeavors here.
Thank you, sir. You have a great one. Take care.
Bye-bye.
All right, guys, there you guys have it. Great interview there. Interview with Joseph Brusuelas. This is the chief economist of RSM. Like mentioned in the chat, also was the senior economist at Bloomberg. He talked about it early on. I always like to find out about their journey, how they came on here. And that's why I'm bringing these experts on to Money Mitch right here, because I want you guys to get the perspective from the experts also. You know, there's one thing me talking about, you know, a conversation or something that I'm looking at, but these are the guys that have really gone through it, that know the game. And like you said, you need to be getting that experience and getting the comments from people that have gone through this. Because, yeah, I can take a look at it and I can take a look at levels, but I've never been through this high inflationary environment. I'm learning myself just like you guys are yourselves. So hit the thumbs on up if you guys enjoyed that interview. Let's keep it going. Let's keep going. Yes, Jay Raz, we need Jason to come on back, my man. I'm going to have to send him that clip so he could show that, you know, some people want him back. So appreciate you guys in the chat. Hit the thumbs on up. We're going to get on out of here. It's 5:04. I went overtime like usual. So please give me a thumbs on up. Catch me tomorrow on live trading with Benzinga and let me know. Did you guys enjoy this interview? Do you guys want to see more interviews on Money Mitch? I can get to more economists out there, strategists, and get the expert opinions that you guys want to hear from. If there's an expert that you guys want to hear right here, throw it up in the comments. I'll hit him on up. See you next time right here on Money Mitch. Until then, tomorrow, I'll see you guys on live trading. Let's keep it going. Keep battling. We'll see what happens in the SPY. Like always, have your outs. Know both ways and know how you want to approach this game, because it's not about one strategy. It's about execution, execution, execution. We'll see you next time, guys. Money Mitch.
It's time for Money Making Mitch. When investors need a story, we're going to the moon. Welcome to Money Mitch, where story is everything. I'm here to find you the next opportunity. It's all about the green hands. Now we all know the bull market is here to stay. Money Mitch.